Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency. And before taking a look at the markets, wanted to let you know about my ECS.SWAT method. So if you're curious how I tackle the market, if you're interested in finding a simple way of trading patterns, if you like my analysis, you might want to check out Wave Analysis Trading SWAT, this link right in here. It's more than waves. It's really about moving averages, fibs, fractals, and trading these patterns without necessarily knowing the patterns. All right, that said, we're going to take a look at the euro dollar. Of course, yesterday on Wednesday, there was an important Fed decision to cut the interest rate by 0.25%, 0.25, down to basically here 0.25% to basically 2 to 2.5 rather than 2.25 to 2.5. So now it's around this level at this moment. That actually sent the dollar up, surprisingly. Typically, an interest rate cut would indicate weakness for that currency. Apparently, the market thought it was already priced in, and it sent the dollar higher. But also, more importantly, maybe was the fact that the Fed was indicating that it will not necessarily do many rate cuts soon after this. So that sent the euro dollar down, obviously, that dollar strength. From a SWAT perspective, I personally didn't trade after the news event, and I must say that my personal own analysis was indicating that this is a very strong support zone. But funny enough, my own method indicated that a breakout was happening with a red arrow, a red candle below the 20 MA and the moving average is aligned. I missed that trade personally, but it did go straight to target at 110.30. So that's an example of a SWAT trade, although I didn't trade it myself. That is the kind of type of trade that SWAT is after with these red arrows here after retracements. That worked out well from a SWAT perspective on the daily chart. Momentum has already been in the market since this pullback, and it's ongoing bearish momentum at this moment that was able to break below 111. 110 is probably the next support zone at this moment in support level. Now, this break below 111 and the triple bottom that we had here is basically changing the matters quite significantly. Let's take a look at the monthly chart. There we go. So with July ending as it is, that's a bearish engulfing twin there. Of course, with the 1st of August, there are new monthly candles to look at. July has now also been finished. June was bullish. July was bearish. So looks like there's more dollar strength at the moment, and that this rising wedge and double bottom didn't play out as reversal patterns for the moment. And that's the danger of reversals, isn't it? These patterns don't necessarily always play out, and the trend can be very strong sometimes. This is an example of that, in fact. So for the moment, more downside pressure. Let's put a fib from here to here. And probably price is spaced down to the 78.6 fib. If it breaks below 110, that is, of course. That round level, 108, is the 78.6 fib. So that's possible, I think, as a potential target. Here you can see 1, 2, 3, 4. It looked like the end of a wave 5 with the right falling wedge, but no, this was still a retracement within the downtrend. So for the moment, I would say that this is probably ABC completed. That this could be maybe 1, 2, 3 down to here actually. 1, 2, 3, 4, 5 like this. 1, 2, 3. This is maybe wave 4 like this. So down for wave 5. So let's put a fib from here to here. There we go. 23.6 fib. Minus 272 target at 108.75 for the moment. So that is, that's still quite a distance from here. That could be a level to think about as well as a downside target. Let's dive in now to the daily chart. There we go. Here it could be a wave 1, 2. This all looks now like a wave 3 for the moment. And within wave 3, let's zoom into the 4-hour chart. It looks like this was... Well, that's tough at this moment, but it looks like probably a wave 3 ongoing at this moment, with this being some type of wave 5. I think that for the moment, most importantly, whatever the wave count is at this moment, the moving averages are aligned. And if there is a pullback like this into like a bear flag or some kind of contracting triangle, more downside is likely to continue at this point. Price made a low of 110.33. So for the moment, I think on the hourly chart, if it makes a pullback into the 38, for instance, 38.2 fib and the 21 EMA, that could be a bouncing spot for a move down to 110. But not only that, I think based on this breakout, there's a fair chance of a pullback continuation, then another pullback, and then one more continuation, and maybe even one more after that. But certainly, I think 2 lower lows is most likely going to take place on this euro dollar. All right, pound dollar, same thing. Of course, there was a triangle here. That triangle broke. This was a trade I managed to catch, not the euro dollar, but the pound dollar, yes, and made a very strong fall. And you can see that with the red candles below the 20 EMA, everything aligned, short-term moving average down, and was indicating that basically with my wave analysis that there would be a 50 fib, 38, 50 fib bounce perhaps, and there was an ABC pattern up to that 50, 38.2 fib zone, and then a bounce at that spot. And price broke below it on the 20 below the 20 EMA on this hourly chart. Now for the moment, I think that I'm not that interested in trading the pound dollar right now. It might move lower. There is momentum here on all time frames. The breakout on the 1 hour chart was too corrective for me to trade it. That's why I skipped this breakout for the moment. I was looking for a pound dollar break, but haven't traded it yet. But that's basically typical for SWAT. Red candles with the moving averages aligned. A very simple kind of way of trading, but very clear and visually easy to spot. Now, so from that point of view, I skipped that breakout, although it is looking fine and might continue. From a technical analysis point of view, the monthly chart, obviously very bearish candle. Look at that. Let me take away this fib. Sorry about that. Let's go back to this chart then quickly. There we go. Monthly chart, very bearish candle, obviously. Closing it low. Bear is fully in control of that. Next bottom is at 120. There we go. And price should be aiming at that level, and that could be a bouncing spot as well. Weekly chart, very bearish candle so far. Acceleration, and expecting to see a continuation. Daily chart, also very strong. Downtrend continuation after the triangle. Everything is aligned on all time frames. Pound is as bearish as can be, basically. But at this moment, I think that, let's see, 1 hour chart, it could be an immediate follow through. What I probably rather wait for the moment is price to give me a little bit more clarity at this point. Either make a bear flag and then re-break below the 20 EMA. That could be interesting. Or even on a 50-minute chart, if there is an immediate breakout, what I would probably want to see is price move below this bottom at, let me check, 121, flag, and then continuation. The reason is because I think that this could indicate a bigger correction, maybe up to the 144 EMA on the 50-minute chart. Maybe go back into this resistance zone up in here. And I think there's that potential for price to move up like that. Now, I might be wrong, don't get me wrong, but of course, I'd rather not trade in here. I think it's a little bit in the middle. So if it bounces up and then reverts back down, I would like to trade it. Or if it falls then, flag and then continues, that's fine too. But at this spot, I think price is a little bit vulnerable to go back into this zone. There are a lot of candles in this zone, and I think that price might basically be pulled back into that before continuing lower. All right, that's it for now. If you're interested in SWAT, of course, check out this link. In any case, see you in the video over the weekend. Wish you good trading and a great week. And of course, be aware that the pound has an interest rate decision, by the way, on the 1st of August. I forgot to mention that. That's important as well. So I wanted to add that. The pound interest rate coming on the 1st of August. And of course, the 2nd of August is going to have non-farm payroll and unemployment rates in the US. And that's going to impact both the euro dollar and pound dollar via the US dollar. All right. See you soon. Cheers.